New economic fears today after another U.S. job report falls below expectations. Just 22,000 positions added in August compared to 75,000 rather predicted. And June numbers were also revised downward. Joining me now is Lori-Ann LaRocco, senior editor of Guests and global supply chain reporter for CNBC. Lori-Ann, it's good to see you again. So let's get to the actual numbers, which show a stark decline from predictions, and the unemployment rate thus rose slightly to 4.3%. A level not seen since 2021. What do these numbers tell you?
You know, the numbers tell us what economists have been talking to us on CNBC is about this worry in terms of an economic slowdown. And what we're seeing is just that. I mean, even U.S. wage growth also went down. So these are tea leaves because in the next week or so, you're going to have the Federal Reserve meeting in terms of interest rates. So for the investing community, they are looking for these tea leaves to see if the Fed is going to cut rates as a result of weakness. And this latest report, and coupled with the revisions that you just mentioned, all points to a weakening and slowing down jobs market.
So the new report from the Bureau comes amid the constant fluctuations in Trump's ongoing trade war. What role could tariffs be playing in all of this?
Tariffs play a huge part in terms of the free cash of a company, Alex. And so you've got companies, every company, in fact, across America paying more money. So they are going to rob one section of their cash balance sheet to pay for the tariffs. And that's where the jobs lie. So if you are laying off, they are not going to replace those individuals. You are not going to increase wages for the workers that are working for you. And so I have seen personally with companies that I've been dealing with during this trade war that they have cut back workers. They did not want to, because they can't afford the tariffs. So this is how the tariffs are playing a real important role in the jobs market.
Yeah, staying with tariffs here, your recent piece in CNBC, it reads, holiday inventory levels are tea leaves to read the state of retailers and consumer spending. So how will Trump's tariffs impact spending, say, in the coming weeks? Are we nearing inflation anytime soon?
We are definitely going to see more inflation, Alex. In fact, we saw it with the back to school. You know, data showed that you had an increase of 7.5% with the back to school prices. Inflation for the holiday season is brewing in the warehouse. And the reason why is all of these products were brought in the spring and summer, either right before the tariffs where logistics prices were going through the roof, so you can get it in before the tariff, or they came in during the tariffs when they were slapped. And so what you're going to see is it's going to be like a trade tariff type of skew game where products that you can increase prices because they might be more expensive can go up, and the cheaper prices will go down. And so this is what we're going to be seeing in the coming weeks, and there will be less items on those shelves as well.
Oh, none of that sounds very good, Lori-Ann LaRocco, but thank you so much for sharing with us. We'll see you again.